Welcome back to the show, everybody. We have got one lined up for you today. We've got Polysign-Atomic Settlement Ledger Songbird. Ladies and gentlemen, Brazil Central Bank, Ripple, and ODL. Let's talk about that. We got Sam Bankman-Fried and CNBC, and this is one of the sickest displays I've ever seen to help set up and continue a narrative to exonerate someone. It will make you so upset, but you need to see every bit of it. And what could the FTX collapse and scandal have to do with Ripple and XRP? I may have something for you on that. We're going to hear from Brian Brooks and so much other news. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, Twitter, and Facebook for exclusive content. Right now, $901 billion market cap for cryptocurrency. It's up 1.5%. Bitcoin over 17,100 plus right now this morning. It's up 3.3 on the 7-day. Ethereum 1,200 plus. It's up 8.8 on the 7-day. Tether has a $65 billion market cap. Keep an eye on it, ladies and gentlemen. 40 cents per XRP this morning. We're up 5.2% on the 7-day. Ladies and gentlemen, the Global Investor Conference for Link2 is coming up December 6th and December 8th. Through December 8th, and it is going to be fantastic, and in no small part because I'm going to be on a panel, and it's going to be Linda P. Jones, myself, and maybe a couple others, so don't miss it. Go to Link2 and find out where to get signed up, because I'm going to try to get a link for you and place it underneath this video as well. So make sure you do that. Do not miss this. You're going to want to be a part of it. Now let's get started. Link underneath the video, by the way, to get Polysign. You're about to hear some great stuff. Oh my goodness. It is just mind-blowing what's going on. And I don't know how many people realize this, but you know, Polysign is really the internal parts of this, this atomic settlement part and the protocol they've built. That's David Schwartz. That's Arthur Brito, co-creators of the XRP Ledger, everybody. Let's take a listen to Jack McDonald, the CEO of Polysign, and listen to what he says here.
Could you help our audience understand why this instant settlement idea is so important?
Instant and atomic settlement, you can think of atomic as really a pass-fail. So either both sides prevail or both fail to transfer. Among other things, it overcomes the challenge of Ryan and Darren want to trade fiat currency for an illiquid asset. And let's just say that you don't know one another. And we have this question of who's going to go first. Are you going to put your money on the table and then Ryan is going to deliver the share, or is Ryan going to deliver the share and then Darren's going to put the money? So what our settlement layer is designed to enable is removing that obstacle of who goes first and essentially providing guaranteed settlement. So the only way that Ryan will put his fiat currency on the table, and the only way that Darren will put his asset on the table to instantly be exchanged for one another, is if all the preconditions leading up to that have been met. So I think it was Darren that has the asset. Let's say Darren has a private company share. Let's say it is held at a cap table management company, the record, the transfer agent at somebody like a Carta. Ryan doesn't really know if that 10 shares of SpaceX or Link2 is unencumbered. Does Darren really own it free and clear? Does Link2 have a ROFR on it, etc.? And it was only after all of those conditions are met that Ryan would feel comfortable sliding his money across the table. And Darren, you're only going to feel comfortable putting your shares on the table if you know that Ryan does indeed have $1 million of fiat currency at a bank account that's held in his name, that's held in escrow, so he can't, renege on the deal, sort of thing. And so it's basically memorializing those attestations that have been made on both sides, verifying them both, and then allowing for this swap to occur. So essentially, you can think of it as providing for guaranteed settlements. It's essentially an escrow-like settlement feature that removes a lot of third-party counterparties that would otherwise need to exist to enable that to happen. Third-party.
Let me just stop right there. And first of all, shout out to Polysign, Jack McDonald, and Nick Burafito from Link2 for sharing this clip. Look, look, I always try to get my mind around these things. And I tell you, it always helps me to try to, superimpose what's going on in the traditional markets over these new emerging markets. And if I understand what Jack McDonald is saying here, and, hopefully I'll get the chance to speak with Jack, it sounds like what he's describing to me, the layman, is a new modernized version of the Depository Trust Clearing Corporation, the DTCC, which, settles over $2 quadrillion worth a year. Maybe I've got that wrong, but I don't, that's what it sounds like to me, and I'm not saying, obviously it's got to grow into that, but it seems like it's designed for that kind of purpose, but in a very, very new and efficient way. We'll find out. I'll get more questions on that. Link underneath the video for link to, ladies and gentlemen, private equity. Get it. It does not last long. Check out my sponsor. Hugo Filion right here from Flare Network says it's so important that people do not use centralized infrastructure. This is amazing. And he says, thank you to Ledger. Look, I'm getting excited now. Hugo and Flare Networks have been working tirelessly here to get this platform up and going and to have things take off. And as anybody who's innovating has had a lot of false starts along the way, but you know what? It seems like they're getting very close to being able to launch, and I couldn't be more excited to see how it's going to work out. So shout out to Hugo and the Flare Networks team here. But this is great also for Ledger and Songbird to be connecting here, and I will be checking that out. I'm also interested in testing some of my Songbird as in how to stake it and go through that process, and I'm going to do that and put that in my private group. So I'm going to make sure that they have access to that. Now, Quant Network thinks Twitter is set to become the payments platform in 2023. Reminder, we covered it here. Elon Musk, I think he's going to change Twitter from Twitter to X.com. He's already applied for FinCEN for the application to become exactly that, a payments platform. And I think it's going to mimic what we see like with the WeChat over in Asia that's used so much, so often. It is just really blended into everything they do. And I think it's coming. And listen to what this gentleman here from the Quant Network thinks.
Ways to do payments using an existing platform like Twitter. So having that connected to bank systems, to central bank digital currency systems, peer-to-peer systems, we're going to have a new type of world. It's very hyper-connected. So I think 23 is the start of that.
Yes, a hyper-connected future.
Yes.
Excellent, Gilbert. Dan.
And there you have it. And I couldn't be more excited. Let's get that thing going yesterday, right? Let's do it. I think we're all ready. Meanwhile, we see things are continuing to move. Brazil lawmakers vote in favor of recognizing crypto. It's not just Bitcoin as a means of payment. I did go down the article, and it's a crypto bill, which obviously does apply to Bitcoin as well. Joyce here shares that, yes, Brazil lawmakers approve regulatory framework for cryptocurrency, but it doesn't mean that Bitcoin will be used as legal tender. And that is an important delineation to make there. Also, Brazil's central bank will be in charge whether or not it will be used as a payment. Guess what? Brazil's central bank is RippleNet. Well, as a reminder, digital payments network Ripple announced on Thursday when this came out, which was back in August, at the end of summer. It said, announced that Thursday that foreign exchange company TravelX will utilize RippleNet's on-demand liquidity to facilitate cross-border payments between enterprises by utilizing XRP. It is also noted that TravelX Bank is the first bank approved by Brazil's central bank to operate exclusively in foreign exchange. So there you have the clarity on that. Now, we change gears. Oh boy, this is going to make you sick. You need to see this. I took out highlighted clips here of what you need to see, and what you're about to see, I believe, is a giant ploy by CNBC to set and control a narrative, blame Alameda Research, and exonerate Sam Bankman-Fried. CNBC propped up Sam Bankman-Fried, who they crowned as the next JP Morgan. If you or I had done what Sam Bankman-Fried had done, this interview would be behind bulletproof glass at a prison visitation center. Take a listen to this and very carefully listen to every time they starts to lean in that it's really Alameda, not Sam Bankman-Fried or FTX that caused all of this. Listen to this.
Was that Alameda was the primary liquidity provider on FTX. It was 40-something% of volume. It was the backstop liquidity provider.
And there you go. It's not my fault. It's Caroline's fault.
And you scroll forward to 2022, it was down to 2% of volume. We had a lot of backstop liquidity providers, but it still had a big margin position on. And I was failing to pay nearly enough attention.
Damn right.
I was failing to pay nearly enough attention to positions and positional risk on the exchange, and to Alameda's in particular. And I also, frankly, made a mistake that I feel pretty embarrassed to have made. A lot of these are, but I substantially underestimated what the scale of a market crash could look like and what the speed of it could look like and how correlated it would be.
But that just suggests that you were just perhaps hoping against hope that this would all work out and that nobody therefore would realize what this commingling was all about?
And then throughout this, I just have to say this. Watch how Andrew Sorkin is talking to Sam Bankman-Fried as if he's a celebrity football player who dropped the touchdown pass and lost a Super Bowl game. Better luck next time, right? Maybe the next time around you'll get it right. It is pathetic and disgusting.
So it's not how I viewed it. And in particular, again, most of the firms had margin positions. Most of the firms had burrows on FTX. The problem here, this was too big. I was surprised by the size of what it was.
But it's not just too big. It's assets that, look, it sounds like there were assets that may have been allowable to be loaned, but then there were assets that weren't allowable to be loaned, no?
It doesn't sound like. That's exactly what we've learned from the bankruptcy filing. It doesn't sound like it. That's what happened, Andrew. Find your backbone, brother.
So, I'm still looking into the details of some pieces of this, but I do think that in addition to what I had seen as sort of law of the standard borrows here, that when we scroll back to 2018, or to 2019, I guess, FTX didn't have bank accounts. It didn't have any bank accounts globally. We were trying to get them. It took us a while, took us a few years. And, there are customers who wanted to wire money to FTX. And so I think in the meantime, some of them were wiring money to Alameda Research to get credited on FTX. And I think that was a substantial sum. And I think that the FTX's internal accounting did correctly, effectively try to debit Alameda for those funds, but it didn't happen in the primary account. And so it didn't happen, it created a discrepancy between the display of the account and what was really going on there. And I'm still looking into exactly how that worked mechanically. But that did make that position size substantially larger than I thought, and I think than what you would have gotten from most of the normal avenues.
And were you using FTT and Serum and other things to collateralize the loans at BlockFi, do you think? I mean, this goes to the whole idea of both the value of these things and also whether you were trying to buy BlockFi, in fact, to continue to support effectively Alameda or FTX.
Right. It might be. I would guess it was, but to your point, my guess is that the amount paid for BlockFi was probably bigger than the amount that Alameda had opened with it. I don't know that for sure. Again, but I wasn't even looking at what that number was really. But my guess is that the amount paid for BlockFi was probably bigger than the amount that Alameda had opened with it. I don't know that for sure. Again, but I wasn't even looking at what that number was, really.
If Brad Garlinghouse spoke like this, I wouldn't own one XRP my whole life.
But I think that's about right.
I want to go back to the Alameda piece of it for just another moment, if you'd stick with me here. You had told investors and regulators that you were not involved in Alameda decision making, and yet in the case, Alameda invested $1.15 billion in Genesis digital assets without your consultation or approval. That's the question. And my understanding is you also served on the board of Genesis Digital Assets. And so I'm trying to understand how you wouldn't have been involved with Alameda.
So I was somewhat involved with venture investing, and that was done out of a separate entity than any of Alameda's proprietary trading, than its activity on FTX or other crypto exchanges. But I was consulted on some of its VC investments, including with GDA.
More pivoting and posturing to try to show that it is not me. It wasn't my fault.
What are your lawyers telling you right now? Are they suggesting this is a good idea for you to be speaking?
No,
Well, this is funny. This is funny. Billions of dollars of hardworking people's money's lost, and this is funny?
Very much not. The classic advice, right? Don't say anything. Recede into a hole. And it's not who I am. I mean, it's not who I want to be. I think I have a duty to talk to people. I have a duty to explain what happened. And I think I have a duty to do everything I can to try and do what's right. If there is anything I can do to try and help customers out here. And I don't see what good is accomplished by me just sitting locked,
Yeah, he's trying to avoid there saying that, the accountability of I don't want to be locked up in jail. I don't see the good in me being locked up in jail. Well, that's what accountability is, Sam. And it doesn't sound like you've had much of that in your life. And that's what prison is for. It's for accountability, my friend.
In a room pretending the outside world doesn't exist.
You're in the Bahamas right now. Are you in the Bahamas because you think you can't leave?
No, I'm in the Bahamas. I have been in the Bahamas for the last year, and I've been running FTX from the Bahamas. Been running FTX Digital Market, our primary operating entity down here. With Bahamian regulators and others in contact, and right now I'm looking to be helpful anywhere I can with any of the global entities that that would want my help.
We want your help. We want you to fly back to the United States, turn yourself in, go to jail, and confess every single thing that you know.
Do you think you could come to the United States or go elsewhere?
I to my knowledge, I could.
Have you thought about doing that?
I've thought about it, and I've seen a lot of the obviously a lot of the hearings that have been happening. I would not be surprised if sometime I am up there talking about what happened to our representatives or wherever else is most appropriate.
How concerned are you about criminal liability at this point?
So I don't think that. Obviously, I don't personally think that I have. But I think the real answer is that's not. It sounds weird to say, but I think the real answer is that's not what I'm focusing on. It's there's going to be a time and a place for me to sort of think about myself and my own future, but I don't think this is it. Like right now, look, I've had a bad month. This has not been a fun month for me, but that's not what matters here. Like
more laughter. This is a lighthearted moment. Again, like we dropped a pass, the winning touchdown pass in a Super Bowl. That's not what this is.
What matters here is the millions of customers. What matters here is all the stakeholders in FTX who got hurt, and trying to do everything I can to help them out. And as long as that's the case, like I don't think that what happens with me is the important part of that, and I don't think that's what it makes sense for me to be focusing on.
Sam,
and I also, frankly, made a mistake that I feel pretty embarrassed to have made. A lot of these are, but I substantially underestimated what the scale of a market crash could look like and what the speed of it could look like and how correlated it would be.
But that just suggests that you were just perhaps hoping against hope that this would all work out and that nobody therefore would realize what this commingling was all about?
That's exactly right. Because the reality is that you don't use customer funds. And you don't get the luxury to be the CEO of a company like that and then play ignorant to the fact that you didn't realize what was going on with commingling of funds. It's literally your job to know. This dude acts like he lost at a game of Dungeons and Dragons or Mario Kart and he could just reboot and start over. This cat is living in fantasy land, and we need to make sure we don't let the CNBCs and Andrew Sorkins control the narrative here as if this is some lighthearted event that took place. This guy needs to be in jail. There's no question about it. And if it was you or I, we'd be in jail. There is no question about that either. Now let's look at this, because Brian Brooks, I believe, hints at something here that could change the game for the FTXs of the world and the way that this thing fell apart. Take a listen to this quick clip here.
By talking about the always-on economy, and then you asked, what are the prospects for crypto legislation and regulatory reform, this year? If all of the pending proposed regulations and legislation were enacted this year, it wouldn't do anything about the premise of your question, the issue of the always-on economy. Because what we have in the United States, I believe, is a structural problem with regulation, and it is something that really does separate us from the other, G20 nations. I mentioned a second ago the way that we distribute our financial regulatory power across not actually 3 agencies, but 5 agencies, if you include the securities and commodities regulators. The ultimate problem, I believe, that we have, which is the problem that crypto and Circle in particular is trying to solve, is the fact that the nature of the American banking system, which is a closed system, not an open banking system, means that we require anybody who wants to settle a trade, anybody who wants to process a payment, to connect through the government's payment system. That is the only payment system we have in the United States. And the only people who are allowed to connect to the Federal Reserve's payment system are banks, nobody else. And so fintech can't solve that because of the nature of our regulatory system. So you
and
by talking about,
and obviously, as always, Brian Brooks is spot on here. A couple points I want to point out very quickly here. Circle is trying to solve that problem with USDC, as Brian Brooks highlighted, which tells me that he understands from a regulator position and career he's had that USD Tether is never going to be accepted by governments around the world because they don't consider that to be a real dollar. And I think, honestly, that is the plan for USDC, as I've said many times, is to become that retail digital-facing dollar, not a controlled CBDC by the Fed, because I don't want that either. And it may be a lesser of two evils, but the reality is another thing here. He said it couldn't solve the problem if you instituted and passed everything that's in play as far as a bill right now for crypto. You still have the problem. Why? I believe what he is leaning into and pointing to here is what we call reg tech, regulatory technology, that begins to allow the regulator to run nodes on networks to monitor the activities, as we've talked about, over the entities. Gary Gensler's approach is regulatory enforcement through regulation through enforcement. And that is trying to regulate each entity, and he's doing a horrible job. Look at what FTX did. If RegTech was a thing, then the agencies could run nodes on these networks, and then this activity with FTX and Alameda could have been discovered through the suspicious commingling of funds. But in order for that to happen, I believe we need to see a value protocol adopted. And that really comes down to this right here.
Of course, Ripple, related to XRP. Joining us now on the set, CEO of leading enterprise blockchain company Ripple, Brad Garlinghouse. Yes.
That's exactly right. And Brad Garlinghouse has never acted like Sam Bankman-Fried, and they never get themselves caught up in events like this around the market. And the reason I believe that is because I believe the tone is set here. The moment couldn't be more ripe for a government like the United States to come out, adopt a value protocol or protocols like the XRP ledger, and then clear legislation and bills or whatever they need to allow regulators to run nodes on these value protocols that have been adopted. And then you could have the reg tech necessary to catch this suspicious activity of commingling with customer funds on these new technologies and payment rails. And I believe the moment is right for such a moment for like Ripple and XRP. And we're getting closer to the case ending as we see the systemic cascading effects of FTX and all it has brought to this space in a negative way. And then that brings me to this. We always see the fractal from 2017 to 2018 repeated. When I see $25 to $160, I think to myself, if what I just explained happens based on the catalyst of FTX collapse and its cascading effects, we could absolutely see the government or FSOC come in, adopt a value protocol like the XRP ledger, begin to approve regulatory technology to be able to monitor suspicious activity on these new payment rails. And we, at that point, ladies and gentlemen, have an official fourth industrial revolution and a new emerging market class. Not financial advice from me or anyone else, just my digital perspectives. I'll catch all of you on the next one.